The Credit Suisse crisis explained. Is the banking system at risk? Hold on to your hats, folks. The banking system may be heading for more trouble than we thought. Right after 3 national banks crashed and the Fed played superhero with a bailout, another domino is teetering on the edge. It's not just any bank, it's Credit Suisse, a top player in the banking world. Their share prices nosedived 97% to a mere $2. Investors won't cough up more cash, and some experts fear this is the tip of the iceberg for a slow-burn financial meltdown. But hey, don't freak out yet. In this video, we'll dissect the situation, discuss its impact on the market, and ponder whether more banks are doomed. Most importantly, we'll talk about how you can shield your assets. To stay in the loop on market mayhem, smash that subscribe button. And remember, I answer all your comments myself. So who is Credit Suisse anyway? Credit Suisse is a banking behemoth with over $1.5 trillion in assets and 50,000 employees worldwide. They're one of the big kahunas in the financial world. In 2022, Credit Suisse's CEO admitted the bank was in a tight spot, needing a hefty restructuring to get back on track. They needed to raise capital, which some saw as a desperate move before their downfall.
I am once again asking for your financial support.
The truth is, Credit Suisse was no star performer, with a history of fines, penalties, and failed stress tests. Customers started withdrawing billions, and by 2023, the Fed's stress test exposed Credit Suisse's vulnerability to market shocks and counterparty defaults. On March 14th, they confessed material weaknesses in their financial reporting. Spoiler alert, that's not good. What does this mean for the banking system? As one of those too big to fail banks, Credit Suisse's collapse could cause a domino effect. But let's not forget that the banking system has evolved since 2008 with tighter regulations and better oversight. The Fed has taken measures to prevent another crisis like stress testing and capital requirements. However, they're not exactly clairvoyant when it comes to the unintended consequences of interest rate hikes. How to protect yourself? If you've got less than $250,000 in a bank, you're probably safe. But if you're above the FDIC limit, maybe rethink your exposure to a potential bank collapse. Spread your wealth across different banks, focusing on well-capitalized institutions with solid track records. The Credit Suisse crisis underlines the risks lurking in the global banking system. Bitcoin and gold are surging as people look for alternatives to traditional finance. But remember, things have changed since 2008. My 2 cents? The Fed won't let the system crumble. But we might be stuck with higher inflation for longer than we'd like. The whole system probably isn't collapsing, but it's wise to stay informed and prepared.